Back in 1981, the United States had exactly 324 fully operational oil refineries, churning out the fuel that built the modern American economy. Fast forward to today, and that number has crashed to just 132. Over half of the country's refining capacity has quietly vanished, and the bleeding hasn't stopped. In just the last 5 years, facilities run by giants like Shell, Marathon, and LyondellBasell have shut their gates forever, wiping out over 1 million barrels of daily fuel production. You feel this every time you pull up to the pump and drop 80 or 90 bucks just to get to work. Politicians love to point fingers at foreign wars, greedy OPEC cartels, or just the global markets. But almost no one is talking about the real issue right under our noses: the quiet, calculated dismantling of America's own backyard infrastructure. The U.S. isn't running out of oil. Far from it. It's secretly shutting down its ability to use it. To really grasp how crazy this is, you have to look back at why we built these massive steel cities in the first place. Back in the 1970s, the U.S. got blindsided by the Arab oil embargo. Overnight, gas stations ran dry, lines stretched for blocks, and the government realized exactly how vulnerable a superpower could be if it couldn't control its own gas tank. So America went on a massive building spree. They built huge, complex refineries along the Gulf Coast, out in California, and up in the Rust Belt. These weren't just commercial businesses, they were strategic national security assets. For decades, the system worked beautifully. The pipes of Texas and Louisiana quietly processed crude into gasoline, diesel, and jet fuel, employing thousands of blue-collar workers in the towns that grew up around them. Refining was largely invisible to the average American, and honestly, that was the whole point. You don't think about fuel security when the system works. But those plants were built for an entirely different era. And what's happening right now is a complete undoing of that national safety net, driven by a reason almost nobody is paying attention to.
The irony here is absolutely wild. The United States is the undisputed heavyweight champion of global oil production. We pump over 13 million barrels of crude out of the dirt every single day. We easily beat out Saudi Arabia, and we leave Russia in the dust. By all logic, Americans should be swimming in cheap gas, but we aren't. And the reason why comes down to a massive geographical mismatch that oil companies really don't want to talk about. You see, the millions of barrels shooting out of places like the Texas Permian Basin or North Dakota right now is what the industry calls light sweet crude. It's a highly desirable premium grade of oil. But remember those aging American refineries we just talked about, the ones built back in the 70s? They were specifically engineered and heavily invested to process heavy sour crude, the thick, cheap, sulfur-heavy sludge imported from places like Venezuela, Mexico, and Canada. To process the new high-grade American oil efficiently, these old domestic plants would need to be completely overhauled. We're talking billions of dollars in re-engineering, and big oil simply isn't going to foot that bill. So we end up with this totally backward system. Instead of processing our own premium oil at home, companies load American crude onto massive supertankers and export it halfway across the globe. They sell it to shiny, massive new mega refineries in places like South Korea, India, and China, who are more than happy to pay top dollar for it. Then the US turns right around and buys the finished gasoline and diesel back from the global market at a massive premium. We are literally paying through the nose for the exact same oil we just dug out of our own soil. We are enriching foreign competitors, eating massive shipping costs twice, all while letting our own domestic supply chain hang by a thread. It is a racket that makes zero sense for the guy trying to fill up his truck, but for multinational corporations moving numbers on a spreadsheet, it's an absolute cash cow. So why is this happening completely under the radar? It comes down to a toxic mix of aging metal, massive government red tape, and a brilliantly dark corporate hustle. As we established, most of America's refineries are pushing 50 years old. Upgrading these massive rust buckets to meet today's insanely strict environmental regulations costs billions. When executives at Chevron or ExxonMobil look at the math, dropping $10 billion into a half-century-old plant just to keep the regulators happy doesn't pencil out anymore. It's easier to just walk away. But they aren't just locking the gates and taking a loss. Instead, Big Oil found a massive, highly profitable loophole. They are quietly converting traditional high-output gasoline refineries into much smaller biofuel plants. Take the massive Phillips 66 refinery in Rodeo, California. They recently shut down traditional crude operations to pivot entirely to making renewable diesel. Why? Because state and federal governments are handing out unbelievably fat subsidies and tax credits for green energy. It is a taxpayer-funded gold rush. The oil giants get the tax breaks and the glowing PR campaigns about how eco-friendly they are. But here is the dirty little secret they leave out. These converted bioplants produce a tiny fraction of the fuel the old refineries did. A facility that used to pump out 100,000 barrels of regular fuel a day might now produce barely 10 or 15,000 barrels of biofuel. They are intentionally gutting America's overall fuel capacity to cash in on government handouts. They are trading national volume for subsidized profit margins. And while they collect those government checks, the overall supply of domestic fuel shrinks, driving the price you pay at the pump higher and higher. By outsourcing all this heavy refining, we haven't just killed American jobs, we've essentially handed the keys to the U.S. economy over to the most volatile regions on Earth. Because we now rely on foreign mega refineries to process our crude and send it back as usable gas, those finished products have to navigate literal war zones just to reach an American gas pump. Look at what's happening right now in the Red Sea. We've seen commercial tankers getting hammered by drone strikes and anti-ship missiles from Houthi rebels. What used to be a completely standard, predictable shipping route is now a high-stakes gamble. Massive shipping conglomerates are literally rerouting their vessels all the way around the southern tip of Africa just to avoid getting blown out of the water. That adds weeks to the delivery time and skyrockets the shipping costs that are passed directly down to you. And then there is the absolute nightmare scenario, the Strait of Hormuz. It is a tiny, narrow strip of water in the Middle East where nearly 20% of the world's oil flows. It is a geopolitical powder keg just waiting for a match. If a major direct conflict breaks out, or if a global supply chain meltdown takes those massive South Korean or Indian mega refineries offline, America does not have a backup plan. You can't just flip a switch and reopen a dismantled refinery. You can't turn a tiny subsidized biofuel plant back into a heavy crude powerhouse overnight. Once that heavy machinery is torn down, the door only swings one way. We could have an infinite supply of crude oil sitting safely right under the dirt in Texas and North Dakota, but if a crisis hits tomorrow and we can't refine it ourselves, all that American oil is completely useless. The military gets strained, the power grid chokes. We traded away our national resilience for cheaper corporate balance sheets, and now our margin of safety isn't just thin, it's practically gone. This isn't just some high-level headache for politicians in Washington or Wall Street suits. The fallout hits right in your hometown, on your street, in your local grocery store. If just a few more domestic refineries go dark, or if those foreign imports get delayed by a conflict overseas, the supply of diesel plummets. And make no mistake, diesel is the absolute blood in the veins of the U.S. economy. Every single piece of fresh produce in your local Walmart, every single Amazon package dropped on your front porch, every piece of lumber at Home Depot, it all gets there on a heavy-duty truck that runs on diesel. When diesel gets tight, truckers don't just eat the cost. They literally can't afford to. They pass it on to the distributors, who pass it on to the retailers, who pass it straight to you. Suddenly, a simple loaf of bread or a gallon of milk jumps 50% in price. inflation skyrockets all over again. Not because the government printed too much money this time, but because the physical trucks moving our stuff literally cannot afford the fuel to drive. Yet tonight, there is an average American family sitting around a cramped kitchen table in Ohio. They are staring at a stack of utility bills, doing the brutal math, just hoping gas doesn't spike another 40 cents tomorrow so they can actually afford groceries for the week. They are hoping the price drops. They are hoping the global supply chain holds together just a little bit longer. But most of all, they are completely unaware that the real reason they are being squeezed isn't a war halfway across the world. It's because the massive refinery just 3 states over quietly shut its massive steel gates for good, and nobody bothered to tell them until it was too late. In the end, America didn't lose its refineries to an invading army or a natural disaster. We lost them because, for a very long time, we let the people at the top convince us we didn't need them.